Good morning, traders. Today is Monday, September the 19th, 2022. This is our weekly trading preview and market analyses for what we got going on this coming trading week. Okay, let's get into it. We have a very busy week for us this week, but it is a little bit different structure than what you're normally used to. So if you've been in the trading room for a while, please pay attention because we're going to be very front loaded this week with trades as I'm going to be out of town. I'm going to be out of the country for from Tuesday through the end of the week. So a little bit variation here in our schedule, but let's get in and talk about what we've got going on. We do look, of course, we start off with looking at a market analyses and looking at the weekly. Now, on a daily basis, we are looking at this matrix from a daily basis, but this is our weekly view. It's a little bit bigger, sort of 30,000 foot view, and I think you can see some interesting things here. Obviously, we're still in a very strong sell mode. We've got this 40-10 area, which is working as a pivot point. You're going to see some big demarcation points here just above that 4,000 level, and they're very strong. The market really needs to get, right now we're at 38.73 as of the close on Friday. Market really needs to get up above 4,000 and push above that 40-10 level to get back into any type of bullish stance. But we'll talk about that a little bit more in depth. All of our technical analyses, what's interesting, I think, down here is not that they're just in the sell mode, but after the velocity of the move that we have had the last couple of days, we don't really have any of our technical indicators implying that we are oversold here. Again, implying that there may be some more potential downside in front of us here. So again, not a lot to be very excited about here if you are a bull. Moving into the technical analyses, my support and resistance levels using the ES futures contracts. Again, you can see a lot of what I'm talking about here. This red line right here is the 200-day moving average. Big wall right there. You can see we came up there in August and we hit that 200-day moving average. We backed right back down. We're down below our point of control, really. You can see the volume profile here. This is the level right in here that you can see I spent a lot of last week talking about. And I said, as we were going into the end of last week, we're sitting right here. We're sitting right on this ledge where we've got all of the open interest. We've got the volume profile is really packed up right here. And we've got a little bit of a vacuum down, a little bit of a vacuum up. But we were absolutely, in my opinion, going to break one way or another. I really did. Again, I think the word that I used was a precipice. We are sitting on a precipice here, and we certainly were able this past week to move off of that delineation point, and it was to the downside, and it certainly looks like we've got a lot more downside potential in front of us as well. Again, most of the technical indicators that I'm looking at, not only are they obviously in a sell mode, but none of them are really showing as being overstretched to the downside yet. So obviously that's going to be interesting to see how that plays out over the next couple of days. Our sector rotation, you're going to see that one of the trades that we're going to be looking at putting on this week is going to be a contrarian play. It's going to be in the healthcare sector. I do feel like we are oversold in the healthcare sector here. And finally, even though the market has been really falling apart this past week or so, maybe week and a half, we're starting to see some strength finally come back into the healthcare sector. So we're going to look at a bullish trade this week in the healthcare sector. But you can see that, again, real estate just absolutely getting crushed. And I would imagine that pain is probably going to continue for a while. But at some point, reversion to the mean will take place, and we'll probably find some opportunities in the real estate sector of the marketplace. If we take a look at a 1 week long heat map, man, what a difference a week can make. This was 2 weeks ago, and this was last week. I mean, that's a pretty big difference across the board. You can see BMY, ABBV, JNJ, even Lilly a little bit. That's that healthcare strength that we're talking about, and we're going to try to take a look at taking advantage of that this week. But absolute, just complete 180 in the market over this past week. Big change in terms of where we were performance-wise, and you can see that really delineated here. This was 2 weeks ago. NASDAQ up almost 4% on the week. And this was last week. NASDAQ down almost 6%. And you know, one of the things that this points out, that's some crazy big volatility. You're talking almost a 10% swing in a 2 week period of time. We'll obviously get into our performance track record here as we do every week as we end this video. But one of the things that we look at in our AST investing program is that standard deviation. Not only can we strive to beat the market performance, but can we do it without having to endure this? Because you know what? This isn't any better than this. If we're shooting up 4% in a week, it usually means we can shoot down 4% in a week as well. That volatility, it works in both directions. But again, just an absolute whipsaw in the marketplace over the last 2 weeks. And if you've watched our weekly review performance videos, it really, I think, just speaks to how awesome our performance has been over the last few weeks. Didn't really matter for us 2 weeks ago whether the market was up. Didn't really matter to us last week if the market was down. Our performance pretty much just tracked solid week after week after week. But big whipsaws in the marketplace right now. We look at the put-call ratio. The put-call ratio is another aspect that we try to look at to gauge market sentiment. Are traders building into bearish positions or building into bullish positions? You know, that put-call ratio, when the ratio is above 1, that just means that there's a whole lot more put buying or put volume going on than call volume. When it's below 1, means that we've got more call action going on. So it's a sentiment gauge. But again, it helps us decide whether the market is moving towards a bearish stance or a bullish stance. Well, it's interesting because we really, no matter what the market has done as of late, we've really just kind of stuck in this trend right now. Well, that was not the case on Friday. We finally popped up above 120 and really pushed almost up to 1.6, 1.7 on the put call ratio, which is, again, starting to push very bearish. You're going to see when we look at the pain threshold here in just a second of where the open interest is, that it's really starting to stack up on the bearish side. We look at that right now. As of Friday, the S&P's level was 3873. And you can see some very big demarcation points that I have been referencing now for several weeks. And they do happen to sort of coincide around some nice round numbers. You've got some bullish action up here around 4,100. I think there is a pretty big sentiment in the marketplace that if we can break above that 40-20 level that I referenced earlier as a pivot point, if we can break above 40-20, man, it's back into the bullish camp. And you can see there's a lot of green up here, and it is increasing almost geometrically as we go out to that 4,100 level. So again, I think above 40-20, the market is going to look to break out. But we've got this huge wall of both puts and calls right around that 4,000 level. So it's going to be tough for this market to do anything with that 4,000 level. It's going to have to build some speed if it wants to try to get through here. Down around 3,900, you've got all kinds of bearish bets going on, all kinds of put volume taking place in here. And then again, we finished the market on Friday at 38.73, and I've said for the last 2 days, Thursday and Friday of last week's trading, that this 38.55 level, 38.55 was a big demarcation. It's 4:30 in the morning Mountain Time right now on Monday, September the 19th for me. And I'm looking at the futures right now, and we're sitting at 38.55. We're sitting right in this sweet spot. And that's probably not going to hold. So we either are going to hold it, and it's going to push back up again here, and then we're going to have to deal with the 3,900 level, or we're going to break down below that. And if we break down below this, guys, it's look out below. Our next level down here is around 3,800, and then you don't see anything but bearish action, and there's a lot of bearish action in the 36 to 3,700 range. There is a lot of anticipation down here. There's a lot of open interest thinking that we're going to get down to the 36, 3,700 range. So again, a lot of open interest, a lot of high open interest levels, and at some very key demarcation points that we've been talking about for several weeks now. That hasn't really changed for us. This week's expected move, I guess one of the good things that we've got this week is that last week's expected move was 97 points. We were able to get some really good premium out of that 97-point range. Well, this week it should be even better. We got almost 18 point expected move in the S&P this week. As you know, as largely credit traders, we are looking to sell premium. The bigger the expected move, the bigger the expected premium. And so we love big expected moves. We have had some very blessed opportunities this year with 140 and even 150 and 160 point expected moves. As of late, we've had some pullbacks where we are down into the 70s and 80s. That really hurts our premium. It hurts our ability to get early captures and good ROIs on our trade. But we're back this week to a really strong expected move. We should have some good premium to work with this week. Now, we look at a heat map. Heat maps really show us sort of where that maximum pain is, where those open interest areas lie, and you can see how they do really act as support resistance areas. I won't go into great detail on these, but you can see right there, the darker that color is, the more open interest we have there. Really worked as a resistance level there. It worked as a support level in there. It's worked as a support level there, resistance level up there, support level down here, resistance level up there. So you get the idea. Well, the biggest thing that I want to point out to you right here is this. Man, that's not Snow White, but it's pretty darn close. And that just means that there is a lot of room for the market to free fall if it chooses to move that direction. So again, we love it when the market goes down for two reasons. One is because, as I've noted here, you usually get bigger moves to the downside than you do to the upside. This is a perfect example here of that old analogy that the market takes the stairs up. It sort of steps its way up, and then it takes the elevator down. Well, that's kind of the situation that we're in right here. If we were to break down below that, I don't think we've got a lot of support until maybe even getting down into this 36, 3,700 range. That's almost 200 points away from where we're at right now. So again, I think a lot of downside potential. Doesn't mean we're going down, but I'm just saying that's what we're seeing on the radar in terms of potential. We look at the fear, greed, sentiment reading. It is a sort of a contrarian indicator. It looks at all kinds of things: the stock price momentum, the strength in the marketplace, the breadth of the marketplace, the put-call ratio that we just looked at, junk bond demand. It looks at the VIX, which, by the way, the VIX is broken, but it looks at the VIX. It looks at safe haven demand, which is just the difference between stocks and treasuries and that risk premium, as it's referred to. Well, we're still moving down, but very, very slowly. Still in the fear category. You can see that we were at about 35 on the previous close, and then last week we were at 48. So we're moving more into the fear category, but we really would need to get way down here into the extreme fear before we get that contrarian indicator telling us that maybe it's time for a reversal. So again, none of our indicators really that we look at this point are really implying, first of all, they're all implying sell, and secondly, they're not really implying that they are in a overstretched position, implying that there might be still some easy downside versus that hard downside that you really have to have the market breadth helping you out. Now, trading for this week. Again, it's important that you be aware of this because we are going to be on a little bit of an altered schedule this week because I am headed out of the country on Tuesday. So Tuesday's going to be pretty much off the table, and then we're going to not shortchange you on trades. So Monday is going to be crazy busy. Okay, couple of things to think about on Monday. We do have Japan CPI number coming out after the close in the market, so that's really not going to affect us. But we've got a lot of our trades for this entire week that I am lumping into our Monday trading session. So Monday is going to be crazy busy. We're going to obviously go for a 0 DTE index trade as we try to do every single day. We're going to do that again on Monday. We're going to reinitiate our IWM weekly credit strangle trade. We have had 2 very successful weeks with this in the last 2 weeks. But just barely. It has been a tight one on those, but we're going to reinitiate it for this week as well. We might approach it in a little bit different manner, maybe scaling a little bit here on Monday, but we are going to reinitiate that on Monday. We're going to reinitiate our 4 DTE SPY and Q trades. We're going to reinitiate our PayPal credit strangle. We are on an off week for our long Vega DIA trades. We do those, we add a ladder to that trade every other week. We added one last week, so we're not adding a new one this week, but we do need to add the call side to the new ladder that we put on last week. So we'll be adding that on Monday. We have a gold trade that we usually initiate somewhere around Tuesday or Thursday of this week, but because I'm going to be incommunicado on Tuesday, we're going to do that on Monday. So we're going to reinitiate a new gold trade. That'll put 2 of those trades into our ladder. We're going to reinitiate a new oil trade on Monday as well, because I'm not really sure what my schedule on Wednesday is going to be. So we're going to have another oil trade. That's going to put 2 of those into our trading ladder right now. We're going to initiate, or at least attempt to initiate, we'll see obviously how the premium looks, a 4 DTE Dragonfly on the Russell on Monday. So we're going to set this up for a Friday expiration. We're going to look at a Dragonfly. It could potentially be just a one-sided Dragonfly, meaning just the puts or just the calls. Again, we'll have to see how the premium plays out. I'm very much aware of what Wednesday is bringing for us, but we're going to initiate this, and I think you're going to see the power of what a Dragonfly can do. Dragonflies are a little more expensive trade, so it's not going to be a low buying power trade. It's not going to be a $1,000 trade, but it should be a fairly juicy trade. So again, look for that on Monday. I'm going to throw one of our $50 spec trades on for Monday with a 2 DTE. That's a Wednesday expiration. You guys probably know what's coming on Wednesday. It's FOMC day. So I'm going to throw one of those trades on right up front on Monday to try to get as good a pricing as I can. And then we will see where that lands on Wednesday. We're going to do a leap covered right on XLV. XLV is the healthcare sector, and we'll go into greater detail in our live Zoom session on Monday with that. But I think there's a lot of potential here in this trade. I think there's a lot of stability in the trade as well. And so it is sort of counterintuitive to be building a bullish trade in this type of market environment. But I think you'll see the chart, the technicals, and you'll like the setup. We're going to be looking at doing a ZN trade. This is the 10-year T-note futures contract, and it is a very straightforward wheel trade. Looking for an assignment on this. I am looking for an assignment on this. So this is going to be a very juicy trade. It's going to be a wheel trade. We're also going to take a look at a euro dollar futures. That's the GE contract. Same deal, looking at a wheel trade, wanting to take an assignment on it. So to say that Monday is going to be busy, guys, it's going to be probably the busiest Monday that we have had all year, because we're not going to shortchange it. And Tuesday will be basically an off day. Okay. Also on Monday, we're going to look at putting that Theta Ferry trade on overnight. We just did one. We literally just did one on Sunday evening, cashed out of it right away. Put about, in my case, I did 3 contracts. So it brought in, I did 4 contracts. So it brought in almost $350 in a very short period of time. But it's ideally set up to be just done with 1 contract and wake up and have $100 under your pillow. That's why we call it the Theta Ferry trade. That trade has been amazing, and we're going to continue to try to look at doing that all week long. Okay, so that's where we're at on Monday. Monday is going to be a busy, busy day, guys. Busy, busy day. Tuesday, couple things on the agenda. We do have U.S. housing starts and the Canadian CPI coming out in the morning. Those may or may not move the marketplace, but basically we're going to be taking Tuesday off, lumping a lot of what we would normally do on a Tuesday into Monday, because again, it's going to be a travel day for me. Tuesday evening, I should be in a position to have internet access and take a look at adding the Theta Ferry trade back on. We always want to have the opportunity to put $100 in our pocket overnight. It's always nice to wake up in the morning in the green already before we've even put a trade on. So we will look to trade on Tuesday, but it's just going to be focused on the Theta Ferry trade. Okay. Wednesday is, of course, the big day. We've got U.S. home sales coming out. We've got crude oil inventory numbers coming out. Of course, we've got the FOMC minutes release. And then a half hour after that, we've got Powell's speech that could run for 45, 50 minutes. So we will, as we always like to do on Wednesdays, look for a 0 DTE opportunity. It could potentially be a double dip. We have had quite a few double dip days on FOMC setups. We'll just have to see, obviously, how that goes. But we're going to be working, obviously, on a 0 DTE on Wednesday for after Powell's speech has started. Okay, so it's after the FOMC minutes release. It's after Powell starts to speak. It's after we see what the directional bias is. So there's a lot of sitting on your hands. There's a lot of discipline. There's a lot of being patient on Wednesday's trading setup. Also going to take a look at SFIX. This is a potential post-earnings trade. They will report earnings on Tuesday after the bell. Looking for an 18% implied move on SFIX. And that could land itself to a nice longer term setup for us on Wednesday here. So those are going to be the focus for Wednesday. We will come back in that evening, take a look at the Theta Ferry trade as we always like to do, see if we can put another $100 in your pocket. Thursday, it doesn't stop. We got jobless claims coming out on Thursday. We got nat gas numbers coming out. So Thursday, we will look for a 0 DTE. We're also going to take a look at FedEx, FDX. Been in the news a lot lately. It's going to have reported earnings. So this will be it's about to report earnings. So this will be a pre-earnings trade. Generally speaking, on FDX, I don't like the pre-earnings setups. But we've already had a huge move in FDX this past week. So we're going to take a look at doing a pre-earnings setup on FDX. Lennar Home Builder, obviously in another very active sector of the marketplace, will have already posted earnings. We're going to look at a post-earnings trade on Lennar. So we've got a couple of trades there looking on Thursday. And then, of course, again, the Theta Ferry trade overnight. Man, this trade has been a good trade for us. It has really put a lot of money in our pocket. And it is, quite frankly, the easiest trade we have. You put it on, you go to sleep, you wake up, and there's been $100 under our pillow every time. Well, every time except one, right? We've had one losing trade out of, I think, 23 goes at this trade. So building a nice little track record on that. Friday is usually a typical day for us. At this point, we're usually worn out. We do have the UK and the US's PMI numbers are coming out, but Powell is also speaking, but he's scheduled to speak right at the close. So 4 p.m., I believe it's 4 p.m. Eastern time. I'll have to double check that, but we'll take a look at that. It may potentially get moved up, and if it does, then it's going to be in the market situation. We'll have to look at that as well. So we'll double check on the time frame on that on Friday. We'll talk about that obviously in the Zoom session, but Friday really is just down to a 0 DTE. That's all we're really going to focus on. Now, one of the things that we have not really been able to pull off lately is a Theta Ferry trade on Fridays for a Monday expiration, because you need quite a bit of premium to bring that risk-reward ratio back into balance. But I have a feeling that with the expected move this week, with the FOMC on Wednesday, and with Powell speaking on Friday again, that we may have enough premium on Friday to put another Theta Ferry trade on for a Monday expiration. So we're going to take a look at that as well and see how many of these things we can pack into the week. So that's our review for the week, guys. That's what we're looking at. Just a quick overview of our performance, where we're at. 0 DTs, we've had 115 days and 174 trades. So we have had quite a few double dips. 169 have been winners, 5 have been losers. We don't have any open or adjusting ones right now. Those of you that are members of the program, make sure you click that pin at the top of our Discord and you can watch the video review of every single one of those. Our 4 DTE trades are clicking along quite well. It hasn't been easy the last couple of weeks with these, but we've been able to pull profits out on them. 111 wins, 7 losses. Our IWM trades, we are still showing no losers. This will change, guys. This is going to change at some point. But you know what? Doesn't change the validity of the program. It doesn't change how successful this strategy has been. It's just a solid setup for us. And it continues to perform really well. We have a couple of pairs trades working. I haven't made any notes on the pairs trades that we have open right now. We do have 3 of them that are open and working right now. But we will at some point in the week, this week, take a look at those and see if we need to ratio those a little bit. We were going to do that last Thursday or Friday, but I did want to see sort of what we did with that cliff that we were sitting on, that ledge that we were sitting on. And we did break down below that. And that just gives me a little bit more inclination of, do I want to ratio the short side or the long side of those trades? So we will most likely work on those a little bit this week. Market trades, we haven't added any of those in the last couple of weeks. Positive Vega trades, we added another one of those. We're up to 6 of those right now. None of them have been losers so far. Some of those are still open and working, but so far, no losers in that category. That's been an absolute solid trade. That's the DIA trade. Our Tuesday, Thursday sessions, that's when we really try to focus on maybe getting out of our 0 DTE early, maybe at a smaller capture, booking that profit, locking that profit in, and then taking a portion of that profit, applying it to a butterfly. For whatever reason this past week, we ended up doing more butterflies on the Monday, Wednesday, Friday sessions than we did on the Tuesday, Thursdays, but nevertheless, we're up to 36 total 0 DTE trades on Tuesday, Thursdays. 35 of the 36 have been winners. Scalping results. Scalping was horrible for me on Tuesday. I went really big. 70, 80 grand buying power thrown at my scalping. And, one of the things that you always want to do is look at your trades in hindsight. In hindsight, I would still do it again because there was tremendous potential in that day. Thursday was about as good as of a day. I guess you could say I did learn a little bit from that Tuesday session because I was up probably $8,200 or so in the profit on Thursday, and was at least smart enough on Thursday to stop before I gave it all back like I did on Tuesday. But nevertheless, a little bit of a mixed bag on scalping on Tuesday and Thursday. Dragonfly trades, we are out of all of those this year. We're going to get it. We're going to have another one starting this week on the Russell. So that'll be an interesting trade to set up. Our SSO trade, man, we got killed on the SSO trade over and over again this past week as the market took a nosedive. That's the nature of the trade. We will continue to push that, but again, 1 week's bad results doesn't mean necessarily a whole bunch, but obviously we would have preferred it to have been green instead of a red week, which it was pretty much red all week long. Our overnight ES trades, there's our numbers right there. I guess we're still a little bit lower. I thought we had been up to about 25 total trades, but 22 total trades, 21 of them winners, 1 of them was a loser. These trades are bringing in an average of $100 overnight. The one loser, I believe, I can't remember for sure if it was I don't know why it's in my head, $168 or $182 loss. I think it was $168 loss. So awesome risk reward ratio on these, and it's just been a money maker for it. It's been an awesome trade. Our gold ladders, we are up to 4. We're going to add another gold trade this week. All of them so far have been winners. Same with our oil ladder trades. We're going to add another oil trade this week. That's been awesome. And then our asymmetric system has just been fabulous. It has just been absolutely amazing. We're up about 16% year to date on the AST program. The market, the S&P, is down about 21%. We're only beating the market by about 40-50%. I mean, we're killing it. We're killing it relative to the market. And you know what's impressive is we're doing it at 54% less risk measured via standard deviation. So the AST program, I could not be more happy about it, could not be more pleased. So that's our market overview. That's our trading overview. That's our performance overview. If you're not a member of our trading community and you'd like to check it out, we have a free trial that you can jump in and check it out. No cost, no obligation. It's best for, number one, experienced traders. Okay. If you don't know option strategies, it's going to be tough to get you enough hand holding when we are in and out and in and out and in and out of trades. So it's best for experienced traders, but you need a strategy, you need a system, you need a support group, you need a business plan. You need to know, like I just laid out, hey, what are you going to do on Thursday? What are you going to do on Wednesday? What's your Monday going to look like, right? You need a business plan. You need a one-on-one mentor. You need higher level strategies. You need things that maybe you're not. Have you done a Dragonfly before? If you haven't, maybe you need that higher level strategy. If you need to move beyond 0 DTEs, if you're in a trading room and that's all they're giving you is 0 DTEs, you're not getting value. So that would be a good opportunity for experienced traders to come check us out. If you're already in a trading room and they didn't give you a free trial, you don't have the results transparency. You can't go back and click and see every single trade that they've made and what the results are. That's not cool. That's not good. So we have ultimate transparency. You can have free one-on-one sessions with me. We can talk all day long. We give you that market bias every day. We're going to drill down into levels so that you know what we're looking at for support resistance. We have 22 different strategies beyond zero DTE. We trade zero DTEs in a dynamic fashion. You know, you saw our results there, right? With our zero DTEs. Whatever that is, 98 or so percent, 98.5%, whatever it is, success rate with those. Of these 169 winners, of these 35 winners over here, I'd say probably 40% of them needed help. They needed work. But we were able to turn them from losers to winners because we trade dynamically versus statically. We don't just use a stop loss. Zero DTE setups with at least $1,000 a day potential. No guarantees in the market. Can't make you any guarantees. It's against the law. But I can tell you what the potential of our trades are. And that's at least $1,000 a day profit in your pocket potential. It's up to you and I as traders to manage that potential and do the best we can with it to realize it. But the opportunity is there. So if you're used to trading butterflies or something where you're lucky to make a $200 or $300 or a $400 profit on a day, maybe it's time to step it up to something that's a little bit more higher level, more professional level. And then lastly, the 200% guarantee. You can get into our program for free. Give it a trial. Give it a whirl. If you like it, you can sign up for a month. If at the end of the month you don't think this is the most amazing, most dynamic live trading room that you've ever been a part of, and you have participated that whole entire month, I will give you 200% back on your monthly subscription. So there's no risk, really. There's no reason to not give it a try. So I will drop a link for those of you that want to try the program out. I'll drop a link in the description box below. And my goodness, it's 5 in the morning right now. I'm going to see you guys here in just a few hours in the live trading room. So we have a busy, busy day ahead of us. Thanks, guys. Let me know in the comments if you have any questions. We'll talk to you soon.